This is a time of great opportunity for BHP. The resources we produce are essential to the energy transition and global economic growth. Our products are fundamental to the way we live now and into the future. Now more than ever, we need to provide the world the resources it needs responsibly and sustainably. Imagine what we can achieve if we continue to think big.
Hello and welcome to the discussion on the mining and resources industry and the role in the global economic recovery. I have panelists here today, Namrata Thapar, Global Head of Mining for the IFC, joining us from Washington. In Toronto, we've got Doug Porter, Chief Economist at BMO, and we've got Tom Palmer, President and CEO of Newmont Mining. My name is Jo Warner. I'm the former head of global resources for Colonial First State and now an independent director of First Quantum Minerals and also doTERRA Royalties. Doug, if we can turn first to you as an economist, can you set the scene for how we see the global economic recovery unfolding and what changes we should expect?
Yeah, sure thing, Jo, and thanks for the question. So from a very big picture view, we've just been through the deepest downturn that we've seen in the post-war era for the global economy. But I will say that the initial stages of the recovery were stronger, and I'd say faster than many had expected when we were in the deepest part of the downturn during the spring. And in particular, we've seen an especially forceful recovery in certain areas like consumer spending and housing, which, for instance, in North America, are all the way back to where they were before the pandemic began. But then, of course, you've got whole sectors that have been all but left out of the recovery, and it's all the ones we know well. Anything that where distancing is a real challenge. You know, the entertainment industry, the travel industry are still operating at maybe 40 or 50% of capacity in the best of situations. And of course, those sectors that have been heavily affected now face the added burden of the second wave and renewed restrictions that we're seeing in many parts of the world. I would characterize the news that we've seen in recent weeks as negative for the short-term outlook, you know, whether it's the second wave, the lack of a US fiscal package. But on the other hand, the news that we've seen more recently is actually positive for the medium-term outlook. So when we get out 6, 12, 18 months, I think the outlook in some respects has actually improved, both because of the more positive news on the vaccine and the fact that ultimately we probably are looking at a pretty significant US fiscal package when the election is finally settled and we know exactly what's happened in the Senate. So from a global perspective, what we're expecting is after about a 4% drop in the broader economy this year, we're calling for about a 5.5% bounce back in global GDP in 2021. And just to put those numbers into perspective, in a so-called normal year for the global economy in this day and age, we'd be looking at something on the order of about 3 to 3.5% growth for the global economy. So I think the big picture is that we're not going to completely make up this year's losses in next year. We're still going to, you know, output will still be below where it was on a per capita basis by the end of next year. The unemployment rate will still be a bit higher in most of the developed world, even by the end of 2021 in a relatively optimistic scenario, but we'll be a long way back to recovering it. Specifically for the mining industry, just to morph into what it means for it, this has not been a normal cycle by any stretch of the imagination. It has been wildly different from a number of metrics, but maybe one of the most portions that has been by far the most unusual is just the difference between how goods industries have fared and how services sectors have fared. Normally, services sectors are very stable during a downturn and they actually offset pronounced weakness in the goods sector. That didn't happen this time. It was the services sector that was especially hit because of the inability to closely congregate. So the upside for the mining industry is we've actually seen the goods sector come back a lot quicker than it normally would. Spending has been channeled into things like electronics, vehicles, housing, real estate. That's where the preponderance of spending has been. It's, as I mentioned earlier on, it's come back almost to full scale in North America. And that means overall things like global trade and industrial production have not been as damaged as you normally would expect in such a deep downturn for overall global GDP. So the good news is there have been a number of commodities that have fared remarkably well during this very harsh hit to the global economy, and that includes a number of industrial metals. Copper has actually benefited over the past year. Of course, gold, we all know how it's made a roaring comeback for its very own specific reasons. But there are a number of commodities that have actually held up remarkably well given the devastation that we've seen in the global economy in 2020. And largely, again, that's because it has so heavily been skewed towards hitting the services sector, not the goods sector. Looking out into next year, of course, we're going to see some differentiation between the metals. We continue to favor copper a bit more than the other industrial metals, whereas at the other end, we see zinc and aluminum being a little bit more on the weaker side. But that's our overall big picture view at this point.
Tom, during the COVID pandemic, how's the mining industry demonstrated positive leadership, and has it been valued by stakeholders?
Yeah, thanks, Joe. I think absolutely mining has both demonstrated positive leadership and been highly valued by key stakeholders. I'm really proud of how Newmont, but the broader mining industry, responded to essentially this black swan event that came at us very quickly back in March. We, as an industry, spent a lot of time on health and safety, and health and safety being fundamental to well-run operations. And I think there are many, many examples of where the health and safety of our workforce and our surrounding communities was put at the forefront of decisions being taken, certainly by Newmont, but I think more broadly by the mining industry. A number of operations put into care and maintenance around the world. We put 5 of our 12 managed operations into care and maintenance. Some of those because of government restrictions put in place, but a number of instances because through engagement with local community leaders, we wanted to ensure that we were protecting the health and safety of vulnerable First Nation communities. And until we could satisfy everybody that we could manage the spread of this infection safely, we were going to put operations into care and maintenance. And I think very proud of the decisions we made at Newmont around that, but I think the mining industry made a number of decisions, which I think has put us in a very good place with a number of key stakeholders. The other thing that I think the mining industry did very well, and Australia led the way very quickly back in March, the Australian mining industry developed a set of national protocols that were signed off by the National Cabinet, and the mining industry was able to keep running through those very strict restrictions back in March and April. Those protocols were lifted and used around the world. We used them in Canada, through Ontario and Quebec, in Mexico, in Peru, in Argentina, to work with governments as they were looking to get some industry back up and running to support their economy. Those protocols were used in engagements and form the basis of the procedures we put in place in many locations to get operations safely back up and running. So incredibly proud of the industry. I think Australia did play a leading role. I'm incredibly proud of the things that the industry is still doing to maintain the spread of this infection, the rigor and discipline around the protocols. But by way of example, for us in Mexico, in order to manage the testing of people coming onto our mine site, we have 14 test centres set up across bus stations and airports across Mexico. There's another 4 or 5 set up at the mine site. We have 56 nurses deployed across the country doing testing of people to ensure that they are coming to the mine site free of the virus. We're then testing people before they leave to ensure they're going back into their communities safe and healthy and not having the infection spread. That's one example of one operation within our organisation, but I know that is happening across our industry. And the levels that people are going to is quite amazing. Thanks, Joe.
Thanks, Tom. Namrata, what's been the IFCs approach, and what challenges do you see for new business?
Thank you, Joanne. I actually put together a $8 billion COVID facility, which we call a fast track facility, since March, of which we have already deployed $4 billion. And the aim of that was to mainly sustain businesses and preserve jobs amid the pandemic. Given travel restrictions, etc., and keeping with our development mandate, we focused our efforts on existing clients and their needs. For example, on the financing aspects, we quickly reviewed the robustness of cash flows, if they were going to be impacted due to mine closings or impact by infrastructure, delivery constraints, and worked with clients to find acceptable solutions. With COVID, given we were focusing on existing clients, we gravitated towards 3 pillars: 1, communication; 2, partnerships; and 3, transparency. All these 3 aspects, I believe, are very critical, especially in the mining space. And we are working with our clients and communities to support ESG and promote benefit sharing, specifically in a COVID environment. As well. We are working with governments as well to ensure cooperation and the development of clear and effective regulations to help mining companies navigate the crisis. For example, how we help them on the ground, because we have 186 offices and people are still on the ground. And so the interactions with the government is still very, very a big focus. We supported clients in new training and response programs, helping them with communities. We pivoted existing local economic development programs and reviewed community engagement strategies. Again, very critical to the whole social license to operate in the mining business. And I'll share an example. For example, we have 2 large clients, 2 bauxite mines in Guinea. And in Guinea, the government was struggling to warn people about COVID. And IFC supported a major awareness campaign with both the companies through community intermediaries, social media, and radio to spread prevention messages, and aligned with partnership. Again, the whole idea of partnership with WHO and the government as well. With this, about 8,000 community members outside the fence were sensitized and trained by facilitators, government reps, community reps, women, and youth. Again, big part of the community outside the mining fence. Over 36,000 people individuals were reached via social media and radio. So that's just an example of not just the financing part, but also the community part. I think going forward on new business, we will be impacted because for us, our due diligence requires going on the ground. Currently, there are travel restrictions. So projects and financing at the project level may get delayed. But again, desktop reviews, working with clients and partners and governments still continue. And I think to Doug's point, I think the mining side of with commodities still booming in certain commodities, there should be progress even on the new business side. So thank you.
That's great. Thanks, Namrata. For a sustainable economic recovery, we really need to address climate change and the increased costs associated with it. Tom, is carbon neutrality by 2050 a real option for most miners?
Oh, it has to be. It has to be an option. When you think about the role of metals in the energy transition, mining plays a very important part. Mining is part of the world economy. It's part of society, and we are impacting on the environment. We are contributing to climate change, and we have to be part of the solution to find a pathway to carbon neutrality. And 2050, I think, is an appropriate target. I think it's an appropriate target because it enables you to make some steps to get there. We've just set our new set of targets for 2030. They are achievable. They are science-based. And for the first time, we're looking at both absolute emissions and emission intensity. And there's a pathway to get there, but you must look beyond that achievable set of targets to targets that are aspirational if you're going to get to carbon neutrality by 2050. We don't have the pathways today to get to there, but mining's been around for a long time. We're in the business of exploration. We will find pathways. We've demonstrated many times that we can find, apply our brains, find innovative ways to do things, but you won't get there if you don't set yourself that stretching target. The key to carbon neutrality is things that we can do internally. those scope 1 and 2 emissions. And then they're the things we need to be working together on to get scope 3 emissions down. And I think the key for us as an industry is to work together where we're in joint ventures, to work with our suppliers, to work with our customers, to find those pathways to carbon neutrality. But if we're not setting ourselves a target today to get there, with a bridge through some real science-based targets by 2030, you won't get there. We've set ourselves that aspiration and those targets just in the last week or so. A number of our peers in the mining industry have done the same, and we look to encourage more and more people to set themselves those targets and ambition so that we can then find those pathways to ultimately get there. So I think it has to be part of the world that we leave to future generations, that we are well on that pathway to carbon neutrality within that 30-year timeframe.
Thanks, Tom. Namrata, what is the IFC doing to support sustainable mining?
Thanks, Joanne. I'll break it into 4 pieces that we are looking at currently. For example, number 1, renewables. IFC's energy practice has a committed global portfolio of over around $8 billion and has mobilized approximately $31 billion over the last decade. And we financed more than 10 gigawatts of renewables in emerging markets. IFC is the largest financier of renewables in emerging markets as well. And since mining is also in difficult jurisdictions or in remote places, we are actively in discussions with a number of these power developers and miners to harness that expertise and finance capability to accelerate the deployment of renewables in mines, particularly in Africa. The second piece, I would say, is the financing angle. We are also a pioneer in green and sustainable financing, and IFC has issued its first green bond in 2010, and one of the largest global issuers of green bonds with 157 issued for over US $10 billion in 16 different currencies. So we are also tying that into our mining clients and seeing how we can support mining clients with green bonds or SDG-linked financing, and in light of the climate targets that companies are also putting together. And IFC also sits on the board and can play a role of a sustainable coordinator to guide companies through the process of green bonds and SDG financing. In terms of minerals, as Tom was mentioning, IFC is also keen to support minerals for a low carbon energy transition. Already in our portfolio, 54% is catered towards copper and rare earths, and we are now looking to and keen to support metals like lithium or cobalt. We're also in bauxite, as I mentioned, which is an element towards aluminum. And I think the other piece, the last piece is what we call shared infrastructure, and using the mine as a catalyst for development, be it rail, roads, power, water, for example, desal. And the reason we're saying that we would like to see more shared concepts is, you not only reduce capital intensity and operating intensity, but you also lower the footprint of the mining infrastructure in general, right? Why build 2 railroads or two desal plants if assets are close to each other? So you then reduce the impact on the climate by finding synergies. So those are the 4 key items that we are focusing our development as well as finance mandate on. Thank you. Joanne, you're on mute, I think.
Apologies. It's very exciting to hear that the IFC is actually providing finance for renewable energy technologies. That's fantastic. We need raw materials to support a growing economy, and yet there are times when that requires operating in countries where there may be challenges with regard to the corruption, even at an institutionalized level. Tom, how do you believe companies can maintain the high standards that are expected by shareholders operating in these places?
Yeah, thanks, Joe. It's I look at it from the perspective of governance, and unfortunately, G is at the end of ESG. I think it should be at the front of ESG, because you will not get sustainable environmental and social performance unless you've got robust governance. And robust governance within organisations is what is essential to be able to manage issues around business integrity, compliance, and ultimately corruption. So if I think about Newmont's experience, and we've been on an ESG journey, in particular the governance part of the ESG journey, for over 30 years. And we've learned some very hard lessons. When we left the US back in the late 80s, early 90s, and went into Peru when the Shining Path was still in power, Indonesia with Suharto in the dying days of his regime, Uzbekistan shortly after the fall of the Soviet Union. And we learned some hard lessons. And if you look back on Newmont's history in the 90s and early 2000s, we learned some very hard lessons around. There's an old African proverb: if you want to go fast, you go alone. If you want to go far, you go together. And that has been built into the governance of our organisation. So we have an independent board with robust committees, a robust audit committee, which includes business integrity and compliance, a robust safety and sustainability committee, a robust leadership development and compensation committee. And we spend more time on leadership development and succession planning than we do on compensation. Those board committees set the policy and standard for the organisation, hold management to account. We have transparency in our reporting. We've been reporting transparently since 2004. We've had a leader accountable for ESG on the executive team for 15 or 16 years. And it's through those processes that you develop robust standards and policies around country risk, and where you're prepared to work and where you're not prepared to work. So when you're looking at the mining industry and making significant capital investments that will be in place for years, then we're making decisions about which jurisdictions we're prepared to go into, how we're developing those relationships and influencing key players, whether they be in the local communities, whether they be in governments, whether they be working in partnership with NGOs, to influence how those countries will behave. So that's a fundamental part of being able to manage the risk of corruption, that you've got robust processes in place, you're transparent about what you're doing, and you lead by example. So that if a Newmont or other companies that are peers of ours in the mining industry, whether they be members of the World Gold Council, members of ICMM, are they prepared to go into these countries or not? If you want to have investment from these companies for decades, then you're going to expect to behave along these lines. And then you've got the checks and balances within your organisation through governance to ensure that you can manage the risk of corruption. You either then don't go into those countries, or we've got a number of instances where we've made decisions to exit countries because we couldn't satisfy that standard. So we have to lead by example, Joe.
Thanks, Tom. Namrata, communities typically want an enhanced standard of living and the peace of mind that their environment will be protected now and in the future. How can the mining industry manage and meet the increasing expectations of their local communities?
Thanks, Joanne. I think what I'll try to do is go through this in the eyes of how we look at it and how we then look at our projects and how we change impact on the ground. Indeed, social license to operate is a key business risk. And for any IFC project, it must comply with IFC's performance standards and report on key performance indicators, including revenue transparency, employment, gender advancement, community programs, climate-related targets, and as well as emissions and water consumption, which is an important part of our KPIs. How do we do that? I think for us, when we do our due diligence and we look at financing projects, we want to make sure that we map out all the stakeholders, and with an assessment of three main channels of impact. One is fiscal, second is economic, and third is the environmental and social. And of course, within this framework, each stakeholder will be affected or implicated by different areas, and impact will be different, some immediate, some and some direct for some stakeholders. For example, the fiscal revenues generally go to the federal government and impact it the most, and environmental and social impact the communities first. So in terms of when we look at this framework, we ask ourselves questions around the fiscal impact, the focus on revenue payments and profit sharing. How big is the pie? What's the fair share of the pie? What's the significance to the country's budget? We go all the way to think about what we call public financial management, because we work with the World Bank Group, which then helps the revenue transparency within the government itself as well. Economic impacts are broader, and we'll look at assessing direct impacts through job creation, local sourcing, shared infrastructure, as I mentioned. And the environmental and social aspects are where we focus on communities, vulnerable groups, or stakeholder engagement processes. And I think communication and the stakeholder engagement process and plans are really critical in our due diligence process. And when we work with clients, because it is important in order to ensure and manage stakeholder expectations, you need to go beyond compliance and truly think about leveraging the operations for further enhancement of the impact on the ground, strategic community investments through local supply development chains, SME building, and of course, better revenue management. And inherently, we've seen that these social risks are good when they are mitigated, and because for the company itself, it allows improved project planning and design through local knowledge, avoiding external costs from imports that can be actually done in country, and mainly greater competitive advantage to the company and all stakeholders in our view. Thank you.
Thanks, Namrata. The resources industry does have an image problem. We've had isolated but very large scale events that have had a big impact upon community acceptance, perceptions of sustainability and governance. In addition, there are historic operations that have been closed for many years but remain an environmental risk that has to be managed. Tom, what can the industry do to reassure us that the legacy of the mining industry will be a positive one?
Yeah, thanks, Jo. It's the International Council of Mines and Metallurgy, Mines and Metals rather. It's if you look at that, was formed just about 20 years ago, and it was formed to really bring the industry together to talk about how we manage those issues. It's not an advocacy group. It's a group around setting a set of principles for sustainable governance, environmental and social performance, and having performance expectations around them for the industry. So bringing together, I guess, 28 companies now that make up that peak industry body, and leading by example through setting a set of principles and then following through in terms of performance expectations and setting a standard for ourselves and then a standard for the rest of the mining industry. So ICMM is a critical part of its work, is the performance standard for our industry to help address and create that legacy. The work we're doing as individual companies, as we talked earlier, around climate targets is an important part of that. The work I think that the industry did through ICMM, working in conjunction with the UN and the Church of England to develop the global industry standard for tailings management, was a very important piece of work where we are working to address one of those key legacy issues for the mining industry going forward, and something that's been with the industry for a long period of time. So I think working through ICMM, with ICMM having that important performance role, is critical for our industry, working together across companies to do that. And then within commodities, I think the World Gold Council is doing similar work around the responsible mining standards for gold mining companies. So a criteria for membership of whether it be World Gold Council or ICMM is that you are able to meet those performance expectations and maintain them, and then exceed them. So I think it is about us working together as an industry to continue to lift the bar, recognising, as I said earlier, that we are part of society. We are going to play a very important part in terms of the energy transition that the world is going to go through, and that we need to hold ourselves to a very high standard and continue to challenge ourselves. And I think it's through entities like that that we need to do so.
That's great, Tom. Thanks very much for that. And certainly the ICMM has played a leading role, as you say, in providing the standards and the leadership for the rest of the industry. And a lot of hard work's gone into that. I'd like to thank all our panelists today. It's been a very interesting session. Thanks very much, Doug Porter, coming from Toronto, and Namrata Thapar in Washington, and Tom Palmer in Western Australia. So welcome back to the sunny shores of Oz, and hope the rest of your trip is better than the quarantine. Thanks.
Thank you.
Bye.
Thank
you.
Thank you.
Thank you, Jill. Thank you, Doug. Thank you, Tom.